The following is paid programming.
It's time to talk taxes.
New friends, new opportunities, new partners. EG Tax.
It's Ask the Tax Lady with Esther Julius and EG Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930. Toll free at 1-800-616-9236. And cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Julius.
Hey, everybody, this is the Tax Lady, and this is our hour to make sure that you don't overpay your taxes. And we're going to keep you abreast of everything that's going on. And, of course, I'm joined in studio with Christopher Fabian. Hey, Chris.
Hello, Esther.
Hello, Christopher. And Tiffany Fabian.
Hey, happy Saturday.
They happen to have the same last name. I wonder how that happened.
Miracles.
I'll tell you. Anyway, our phone number, 8030930, 8030930, star 930 on a cell phone. Text us at 716-8030930, except if you're in Florida on WGUF 98.9 FM, and you can't text us. You have to go right to our website and ask a tax question because we aren't able to handle that. So
yeah, but
we're happy to hear that we're in Florida.
Or you
right?
could you could go to our office right on Airport Pulling Road. I was
that's
say.
true. We are on Airport Pulling in Naples, across
Right.
from Tamiami Ford. So okay, let's talk taxes. Our offices are all open. Effective on Monday. The IRS is open a week later on the 27th. You can come in to any of our 32 offices and we will prepare your return, and we kind of stack them up, and as soon as the IRS lets us sneak some through, we will get them through right away.
That's right. Yeah, we've been doing lots of tax returns at the office already, the corporate office. I know Chris was kind enough to finish one of my clients yesterday. She was waiting for her 1099-R, and she said to Chris, well, they emailed it to Tiffany. And he's like, well, that's really strange that they emailed it to her. But nevertheless, he went and checked, right, Chris?
Right, and no email.
Yeah, and let's face it, with electronics, everything seems a little strange. I want to make sure that if you understand that if you did not get the stimulus money in 2021 because you didn't file a return, then you want to make sure you get that 2021 return done before April the 15th. And so you may say, well, why should I file? I don't have any income and I don't have to file. It's true, you don't have to file, but if you don't file, you're not going to get $1,400.
Yeah.
So you really want to make sure you do file. So you'll have till April the 15th to do that. Also, if you're somebody that is in that same kind of category, you said, I really don't have to file, but you're a homeowner in New York State, not in Florida, just in New York State, you could get a refund up to $350 for the last 3 years. And, so because you didn't file, they're not going to process that refund for you. So you want to make sure that you get the refund from the IT-229.
Right, for 21, 22, and 23.
Right, and so, the thing is, you think to yourself, well, I don't want to have to file a return. Well, okay, that's true, but then you don't get the money. So you think about $350 a year for 3 years. That's well over $1,000. And also on that stimulus money that you didn't get if you didn't file the return, that's $1,400, right? And if you're married filing joint returns, $2,800. So it really piles up. It's a lot of money. And that's what's so difficult about doing tax returns, is that you think, oh, this is a punitive program where the IRS, the Internal Revenue, is coming to get me. Not really. Many times it's meant to be kind of a social program, and they administrate all of this money through the filing of a tax return, and if you don't comply and file the return to get that money, you lose out.
That's right. Yeah, it's I had a client call me yesterday and she goes, I don't have to file, but I just want to make sure that none of this applies to me. And so it's worth making a phone call. Yep.
Good for her. I mean, what's the phone call cost, right? Nothing.
Not
we
anymore.
Talk to people all the time. The other thing is that I know last week we talked about this elective deferral that's going to be counted as an elective deferral on your wages if you're somebody that has paid student loans. So if you paid student loans this year of $5,000, but you didn't put any money into your pension plan at work, it counts as if you put $5,000 into your pension plan, so your employer can match, which is really, really important. Big change for this year.
Correct. Pretty cool. I think they're trying to tilt things in the favor of those people that have student loans.
Right. I'm Esther Golias, the tax lady from EG Tax. We have 31 area offices. We have 33 throughout. We have one in Florida and one in Arizona. Go figure, right? But anyway, we want to help you. 8030930, 8030930, star 930 on a cell phone. You can text us at 716-8030930. And our email, our website is egtax.com, and if you're in Florida or anywhere else in the United States, you can ask tax questions through Ask the Tax Lady, right?
Correct.
Okay. All right. So let's talk about how important it is. We're talking about all this money that people can get. Let's talk about the big things that you can mess up on. For instance, the child tax credit. Why is that important? Who qualifies for it? And who should get the credit?
Sure. So the child tax credit is if you have children under age 17 in your house, you can get up to a $2,000 credit, non-refundable, and $1,700 of it this year becomes refundable if you don't have enough income that gives you taxes, but you have earned income, meaning wages or self-employment that you paid into Social Security. So in
that case, they actually give you up to $1,700 per child, right?
Yep.
That you didn't pay in.
Right.
So it's like a welfare program.
It's incredible. I mean, I have a niece who has 7 children. God bless her, right? But, I mean, even if they don't need...
You really do. It's not a fake thing.
I know.
Beautiful.
Well, actually, back in the day, my mother came from a family of 9. I mean, that was the way it was.
Right, but that would be almost $12,000 refundable.
Right. And if you didn't file the return, because you didn't have to file a return, you would leave $12,000 on the table.
Right.
And that's what we tell people is people will call and say, do I have to file a return? And we say, what's your income? What's your tax? And so, no, you don't have to. But do you want to?
Yeah. Do you want to take one of these callers before the break?
Yeah.
Okay.
We'll go to Tom. Hey, Tom.
Hey, how you doing?
Good.
Good.
I have a question about Social Security. If I retire July 1st of this year, and I make about $55,000 a year, that's 6 months. If I start to take my Social Security in July, am I allowed to make over that $22,000?
Yes, in the year that you start collecting, because you're going to be, when you're eligible, and you're under the age of normal retirement age, under 66, correct?
Right.
Then
right. I'll be
there
I'm
is
62.
a phase in. There is a phase, a phase out, so to speak, and they will still allow you to earn more than that $20-some thousand before you'd have to pay it back. What I'd suggest you do is call Social Security, or you can also talk to the financial guys,
Mike Hayflick.
Mike Hayflick, and he'll tell you exactly how much you can earn. But yes, you can.
For that 6 months.
The year that you retire under normal retirement age, they allow you to earn more than that $20-some thousand.
Okay, perfect. Thank you very much.
Congratulations on your retirement.
Enjoy it.
Thank you very much.
All right.
I
I'm
appreciate
Esther Golias, the tax lady from EG Tax. We're going to take a short break. We'll be back on the other side with your calls and your texts. Hey, to us, your family. I'm Esther Golias, the tax lady from EG Tax, joined in studio with Christopher Fabian, Tiffany Fabian. And if you have any questions, 8030930, 8030930, star 930 on a cell phone. You can text us at 716-8030930. And so we have Larry.
Hold on.
Atlanta.
Before we get to Larry
yes,
from Georgia,
Yep.
I was just doing some research online. That gentleman that just called, he is limited to that $22,000. It's once the year you hit full retirement age, you can earn $59,520 and then start collecting Social Security. So, but just double, if I was him, I'd call Social Security and just double check. Don't make, don't make a decision based on us on the radio, right?
Right. Absolutely.
Yes.
Okay. I'm Esther Golias, the tax lady, 8030930, 8030930, star 930 on a cell phone. And we have Larry. Hey, Larry, how can we help you? How's things in Georgia today?
Honey, things in Georgia are always good, always great, always great.
No, I know that because you're in Georgia.
But didn't you get that snow?
No, Chris, no, he did not.
Oh, you didn't? Okay. I know by Atlanta they did.
Chris, maybe in the mountains, but like where I am, there was no snow. It's going to get a little cold, but no, that's not too bad. Hey, guys, I've got a question for you.
Yeah.
So what happened was in 2023, I failed to make my full RMD payments. So I'm kind of making up for that. I paid some in 2023, and then I'm paying some more to bounce on, now. So, Chris, I wonder, and Esther, Tiff, is any problem, like paying extra to cover the 2023 RMD requirements? And if so, is there any accounting things I need to do? What do you think?
So I had somebody call the other day. I was texting bad when I was listening to you, but I hope I got this right. And they didn't make their complete RMD. And so there's a form on the return that you can do. It's supposed to be a 25% penalty of the amount that you didn't take of your required minimum distribution. But it can be dropped to 10 if there's a good explanation.
And if you have a really good explanation, they let you request a complete waiver. So, Larry, was there a reason why you didn't take it?
Well, honestly, I just forgot, Esther. But I will say,
that's not good, Larry. That's not good.
Guys, I will say, I did send in my package to Chris. I did send what I call my mea culpa letter to the IRS.
I'll tell you, like Tiff said, it's a 25% penalty if you didn't take out your required minimum distribution. If you correct it quickly, which it sounds like you're doing, then it drops to 10%. But if you really feel that, like you say, I talked to the banker and they were supposed to do it, and the banker went to Europe and then he got shot by a camel. Oh my God. And so we have a really good reason. Then you can request to have the 10% waiver put over and above that. So, but in your case, I think 10% is what you're looking at.
And this was 23 or 24's distribution?
2023.
And you took it out in 2024, or you haven't taken it out yet?
No, I took out some. I took out part of it, and then I took another part. And again, I'm trying to balance it right. So I took out some more in 2024, and then I have a little left over. So this week I'm going to take out the difference, take out the balance. So I should be square by the end of this week. If that makes sense.
But you're saying from 2023?
Well, yeah, right. What happened was...
Well, then how did you do that return without charging him a penalty?
I probably did the requesting of a waiver because he had the explanation thinking he was going to take it all out right away in 2024.
So he didn't.
So, yeah, this year you'll get definitely hit with the penalty.
Larry, you're in big trouble.
Not big.
Not big trouble, but yeah, you got to be careful of this stuff.
Well, usually I am. I just,
You know the word required. You know what the word required means? I mean that you got to do it. So straighten it out, okay?
Yes, ma'am. Yes, ma'am.
Thank you, Larry.
Thank you, darling. Bye bye.
Back in Georgia. I'm Esther Gilius, the tax lady from EG Tax. 8030930, 8030930, star 930
He's
on
too
a cell
busy
phone.
traveling the world.
Yeah. And what do we have here, Tiff?
Next is Marilyn.
Okay. Hi, Marilyn.
Hi, thank you for taking me. I'm calling about the $1,400.
Yeah.
I've been going to EG Tax for years,
Okay.
and I don't have anything in my bank account that shows that I got the $1,400.
This would have been way back in the
Yes.
2021 return in 22.
And it would have been a
what
check.
we can do is we can pull up your return. I can't do it right now because I'm on the radio, but we can pull up your return if you want to call us on Monday, and we'll make sure that you got that money. If you didn't, then they're supposed to automatically, because you did file a return, they're supposed to automatically send that money to you by the end of January.
Okay, I did look at my return, but I don't really understand all
Yeah,
the numbers.
I know.
But Marilyn, it was money that you were supposed to get from the IRS either in a check or credit card, and we only put it on your tax return if you didn't receive it in a check or credit card payment from the U.S. government.
But that's why she should call us.
Yeah,
and make sure.
absolutely. I don't mean to sound
Right. So, I mean, give us a jingle.
disparaging.
We'll look everything up and we'll make you feel happy. But the $1,400 that I'm referring to is for those people that didn't file a return, didn't get the money, and the IRS is trying to make good with that. But call us because we'll research it for you.
Okay, I did file a return. Thank you, I will.
All right. Thank you, dear. I'm Esther Gilius, the tax lady, 8030930, 8030930, star 930 on a cell phone. And what do we
We
have
got
here?
a text.
and then Mary's after that.
What are the advantages of a PTET? We are two owner S Corp.
So that's the New York pass-through entity tax.
Correct.
Okay? And, you know, I what it does is it reduces the taxable income, and it helps you to get around the SALT deduction, the state and local income, New York State and property tax limitation up to $10,000. But that's about it. So,
Yeah,
and
because
it's not
you're-
subject to AMT.
Yeah, what it is, you're electing as the owner of the company to pay your employees state taxes.
Right,
So it's costing you what it's saving you.
right.
So it sounds really good. I remember going to a seminar 4 years ago when this first started coming out, and somebody asked the person from New York State, and they laughed and basically said, don't sign anybody up for it.
Well, I mean, so the company's paying what you would have paid, and so therefore it reduces your taxable income, but it's like exchanging dollars.
Right,
So
exactly.
anyway,
What's the advantage?
yeah, so it's the New York Pass-Through Entity Tax, PTET. Okay, what else we got here?
Mary.
Tom here?
Mary.
Mary. Hi, Mary.
Hello, how are you?
Good.
Good. So my boyfriend and I purchased a house, and we're wondering how we can handle the taxes for our income tax return.
All right, so here's the thing. It's since you're both two single people, you're going to get high standard deduction. And so it's really better if one of you has enough that you can exceed the standard deduction. It's better for you to, because you own it jointly, and I'm assuming paying the expenses jointly. It's better for one of you to take all the expenses so that you can exceed the standard deduction and make out. I don't mean make out, but I mean and.
Well, they are living in
Since
sin.
you're single, you're probably still making out. But anyway, and one of you would benefit, and then the other, and then you can say, oh, you're in the 20% bracket. You saved $1,000 in taxes. You owe me $2,200, and so that it would. But it's better to not split those deductions because the standard deduction being so high, it's really not going to make much of a difference. If you do it that
Mary,
way, it's better to load it up on one.
Right. Is both of your names on the house?
Yeah.
Okay, yay, then good.
Yeah,
Good
work
check.
it out both ways. Split
yeah,
it.
it's really
one.
it's really better to give it to one.
Okay, perfect.
Okay.
Thank you so much.
All right, and congratulations.
And then don't forget if you do any.
And I'm glad somebody's making up.
And then don't forget if you do any new windows, front door, garage door, hot water tank, furnace, rolls of insulation. There's potential tax credit for you too, Mary and Mr.
That's right.
Mary.
And especially if one is a heavy charity person, it would definitely benefit that person because they get to use all their charity then too.
Yeah, I think
itemized.
Chris is thinking of our daughter and her fiance. They bought a house this year, and so, but Gracie still lives at home, but they're still trying to decide who's going to get the deduction. And so Gracie is a charitable person, and so I think that's the tilt that Chris is thinking about, right?
Yep.
Right.
Yep.
Okay. I'm Esther Golias, the tax lady, 8030930, 8030930, star 930 on a cell phone. Do we have Tom?
We got Mike.
Okay.
We might have to stop for the news in the middle, but hi, Mike. How can we help you?
That's true. We have like 2 minutes.
Hey, how you doing today?
Good. How are you doing?
Great. I got a question for you. I own a couple of rental properties, and I perform all of my own maintenance and like improvements such as remodeling. Now, I know I can write off the materials. Can I write off a portion of my labor in some way?
No, you can't, because if you had the income, it would be taxable. Okay? And so since you don't have the income, it's not taxable, but all your expenses to produce the income is deductible. So, but your wages are for yourself are not deductible unless you were working for a corporation and they paid you on a W-2, which would then be taxable to you.
Understood. Thank you very much.
You're very welcome.
Very good question. It's asked often.
It is. And a lot of people will say, we're volunteering for a charity, or I've given blood. How much is my blood worth? It's just,
yeah, and
they
people
they basically said, nope, it doesn't work like that.
Yeah. And
So okay, so we got to break for the news. I'm Esther Golias, the tax lady. We'll see you on the other side. Hey, I'm Esther Golias, the tax lady from EG Tax. And to us, you are family, and all of our branch offices are going to open up on Monday, the 20th. The IRS is open up for business on the 27th. If you need any help, you can give us a jingle. We have real people that actually answer the phone. We're not going to make you stand in queue forever. We do want to talk to you. We want to help you. And before you go off on your own and you think that you know so much, understand that taxes are very confusing. It's interesting. I have this little example here. Let's think that, so many times you meet people over the backyard fence and they go, I don't pay taxes. I don't have to pay taxes. Well, let's say that you got 2 kids under the age of 17 and you're a daycare provider. And you think, well, I got cash under the table. I don't have to file the return. And let's say you're making $24,000 doing your daycare. Had you claimed that income and reduced it by your travel-related expenses, the food for the kids over the IRS guidelines, supplies and toys, umbrella insurance, your home office because your home becomes deductible, you'd end up with a net profit of $4,800. And so this person might think, well, I am so smart. I outsmarted the IRS. But the truth is, in that situation, you'd owe 0 taxes. You would owe FICA of $734. But let's look at what you didn't get. You didn't get the earned income credit of $1,950, and you didn't get the refundable child tax credit for the kids under the age of 17, which is another $3,400, and you didn't get the earned income credit on the state of New York, so you have just shot yourself in the foot by over $6,000. And that's what's so interesting about tax law, is that just because you think that it has something to do with income taxes, and it does, but sometimes it has to do with money they want to give you.
Right. And and one other thing, not only did they give that up this year, what if they did that their whole life, right? And they
Right.
think but then they also ended up shooting themselves in the foot with Social Security because they never paid into Social
Right.
Security.
And so that means that when they want to retire, they don't have anything in the kitty.
That's
number
right.
one. And number two, let's say that this person has property taxes. They didn't get the IT 229 for 3 years. That's over $1,000. And they probably didn't file that tax return in 2021. And so they're missing $1,400 there. So this person could be out $10,000
Right.
because they didn't know.
Yeah, and I know when you said talking over the fence to the neighbor when I was in Florida training our staff in Naples there, for you Florida listeners, I showed them our old commercial with talking, hey, Wilson, can I do this? Can I do that? And they loved it. Oh my God, that is such a great commercial because that's what people do.
That's true.
And they shouldn't do that.
And like your friends don't know. Your friends don't know, right?
Right.
Okay, so what do we have here? I'm Esther Galicia, the tax lady, 8030930, 8030930, star 930 on the cell phone.
Yep, there's 2 text messages. The first one, it says, is a new blacktop driveway considered a capital improvement, and is it deductible?
All right, explain what a capital improvement is, because everybody
Sure,
comes in and says, I got a capital improvement.
I was just answering this to somebody the other day, and a capital improvement is when you do something to your house to improve the structure of the place
And
that
it's
you
attached to
reside.
the structure,
and it's
right?
attached to the structure. So we were getting new tile for our kitchen because our refrigerator flooded, and so they had me sign a capital improvement form when I was at the place purchasing the tile. And so that simply means that we won't have to pay sales tax on the tile, but there is no deduction.
Right.
It just means that we don't pay sales tax, which
Right,
is
so
the bonus.
when you file a capital improvement form, that means is sent to the state of New York that says, even though these people paid $10,000 for an improvement to their home, we are not charging them the 8.75% sales tax because it's a capital improvement, but it's not deductible. Now, that does not mean that all capital improvements aren't deductible. Some capital improvements are if they fit into the category of energy conservation. A blacktop driveway does not.
No.
Correct. I mean,
Right?
if we're talking a rental property, then it's a
That's a
different.
horse of a different color.
Right.
But they're not going to get the energy credit for that.
Correct.
So, and again, here we go with taxes again. So a blacktop driveway is affixed to your property, and if you filed a capital improvement certificate, you did not have to pay the sales tax on it. Boom. Number two, is that blacktop driveway an energy conservation for your personal home? No, it doesn't save any energy. So therefore, there's no energy conservation deduction credit that you can get for that.
Yeah.
Is your home a rental? No, it's not, so there's nothing that we can do with that. So that capital improvement saves you sales tax, and that's all.
Yeah, and another thing that we always run into is, say someday somebody inherits the house that I just put the tile on. You want to save all those receipts because it increases your basis in the event that they have to calculate the basis for that property that you
But
own.
of course, if it's a personal residence
Yeah,
and you're
right.
filing a joint return, $500,000 is tax-free.
Right.
So that doesn't usually happen, but you're right, Tiffany.
Yep.
Okay, what else we got here?
Yep, we have another text. It says, Esther, do you think number 47, that'll happen on Monday, will put the SALT deduction back in the 24 tax returns?
I do. Okay, so here's what's looming over 2025. In 2017, when they passed all of these Trump tax cuts, they expire in 2025. So through the end of the year, all of these deductions, the higher standard deduction, the higher child tax credit, all these positive things are going to expire as of December 31st of 2025. Well, I'm going to tell you, from what I can see, it seems like they're going to not only re-up those deductions, those credits, and the law changes from 2017, but I think they're going to go after many more tax deductions and credits positively.
Yeah, absolutely. I was talking to one of my clients, and they're very excited about some of the deductions that he's talking about. I think he was talking about more things. His wife is self-employed, and there's more.
No, they're talking about Social Security taxation change.
Right,
Overtime.
that Social Security. This
tips.
would be. The seniors should go dancing in the streets if this happens. If they make Social Security not taxable, that would be such a blessing for so many seniors.
Oh my gosh. Oh, I was doing tax planning with somebody who's retiring, and he's going to have to set aside $8,500 a year in withholdings. But if the Social Security isn't taxable, that figure drops to $2,200, and so significant savings for the seniors.
Right. And if you talk to people that are collecting Social Security, they'll say, "I paid taxes on that money when I earned it," and it's true. However, the increase that they're giving you didn't pay taxes on, and I think that's where the taxability comes in. I'm Esther Gilius, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. You can text us at 716-8030930. Want to talk about... yes,
sorry,
yes,
I just wanted to say also...
Whatever you want to say is good with me.
that, his other things he was talking about during election was overtime and tips, not paying tax to the federal government. Right. The key word there is federal government. New York State would have to vote on that as well, because when he did his original changes in 2017, the New York State got a divorce from the federal government. And
did not pick up any of those changes that
right.
the federal government did. And so really for years now, we have been doing tax returns with new federal laws and old federal laws, because the state of New York would not follow suit. And so I would not be surprised that the state of New York would say we're not playing ball.
Yeah.
Because I don't think they like him. Do you think they like him?
Yeah, you want to talk about another...
And the other thing is, my heart breaks for the people in California, and so they have big casualty losses. Same thing with people in North Carolina that have had from the hurricane, and in Florida. And so if you're a Floridian that's listening on WGUF and you suffered a loss, uninsured or partially insured, on your residence, there's a tax deduction for you. It's called a casualty loss.
Also, I just want to throw a question out there. I thought this was pretty good last week. Somebody called in because he was referred to me by a financial planner in the area. And the question was, he was working here in Buffalo, and he moved to Texas. Chris, was it Texas? He moved to Texas, and he's been back and forth with HR because they keep on taking out New York State withholding. He's completely working from home, and he sent me all the law and all the literature, and he said they shouldn't be taking out New York State withholding. He goes, "I'm living in Texas." And so I gave him the bad news is, unfortunately, the business is in New York State, and so you have all these people working from home. It's where
great. You earn your money.
Yeah, it's where you earn your money.
Even though you're living in Texas, if you're performing a duty in New York State, and that's where you're earning your money, then it's going to be taxable.
And the sad thing is, if you do have to pay tax to another state, we can usually do a 112R, which is a credit for paying taxes to another state.
Ain't no taxes
right.
in Texas.
You got that right. So
just Texas.
No taxes in Texas.
So he's out, and he was very sad.
Right. And again, it's like, if he's really working in Texas, then his income would be taxable to Texas. But if he's really working out in New York, if his income is earned in New York, then it's going to be taxable to New York, and that's what you, as a non-resident, right?
Correct.
All right. I wanted to also mention the pension savers credit. Tiff, you love the pension savers credit.
Yeah, absolutely. So if you are a not incredibly huge earning
Well,
person,
actually, married joint, it's like under 50,000. I mean,
Yeah,
you
it's-
can have some substantial
yeah,
income.
and so you
if you're
contribute to
putting
your
money into
401k.
an IRA, a pension plan, they're going to give you another thing to reduce your taxable income. I mean, your tax liability, and it's called a pension savers credit, right?
Yep. Yeah. It could be 10% up to 50% of up to $1,000.
Right,
As
and
a
that's
credit.
a lot of money, and people miss that like crazy. Daycare credit, and this is kind of sticks like a craw in my throat because many daycare providers say, "I'm not giving you my social security number because I don't want to claim it." Well, goody gumdrops for you.
yeah,
Right?
yeah,
But it's a shame because the children that you're watching entitle that person that's paying you for a daycare credit, and I have to pay taxes on the money I make. You have to pay taxes on the money you make. Daycare providers have to as well.
yeah.
And I just think it's terrible that they kind of slide under the carpeting, so to speak.
And the credit is 20% up to $3,000 and up to $6,000 if it's two kids. I had a client the other day, and he was like, "Oh, great, 20%." And so I spend $45,000 a year, a lot of money, in childcare. So he's like, "I'm entitled to this big credit," but unfortunately, they max it out at $3,000. So he was really, really sad. Do you want to take one of these callers before the break?
Well, actually, I think we're going to take a short break. We'll be back on the other side. Oh my God! Like I've been kvetching the whole week about what's happening tomorrow. You know,
What?
the football game.
There's a football game?
Yeah, I think so. Anyway, you know what I'll be doing. Okay, let's talk about some of the other things people miss. I don't think they realize about the lifetime learning credit. You know, you got kids in college. That can save you when you consider the state of New York and the federal government. If in the first 4 years of continuing education, that credit can be when you combine the two, like almost $4,000, right?
Yeah. Yeah. I mean, depending where your kid, because New York State could give you a big chunk of money if you
Right.
use it as an itemized deduction. Yep.
Right. So, I mean, it's a lot of money. So that's a thing that people can do incorrect. Adoption credit, that's over $13,000 if you adopt a child.
Yeah. Big
Right.
credit. And especially if it's a special needs child.
And then we were talking about energy credits, doors, windows, furnace, hot water tank, insulation, renewable energies. That's a gigantic credit. Foreign tax credit, you pay taxes in a foreign country, you get a credit for that. Health insurance credit, if you're somebody that has been paying your own health insurance, you might be able to get a credit for that if your income was lower than you had projected. Nursing home credit, right? If you're paying as a private pay patient for a loved one to be in a nursing home, there's a 6% credit refundable from the state of New York. If you're, again, private pay, that's a huge amount of money. The public pension is tax-free in the state of New York. So regardless of your age, your pension is completely tax-free if you're on a federal, state, or municipal pension plan. If you're over the age of 59 and a half, the first $20,000 on your New York State pension is tax-free. And these are just kind of like the tip of the iceberg.
Right.
Right?
Yep.
Okay, what do we got here? We have people that have
Yep.
been waiting.
We got Paula from Gettsville.
Hey, Paula from Gettsville.
Hello, Esther. I am calling to find out if you know about the Social Security Fairness Act that Joe Biden signed on January 5th, if you know anything about that.
Yeah, so what happened was a lot of the federal employees never got a fair shake on when they started collecting Social Security, and because they were federal employees. And so what they've done is they're trying to make that up for those employees that are getting below what they should be getting in Social Security. And so that's a great thing.
Wow.
That was my question. So people on a federal pension will now collect Social Security.
That's correct.
That
That's
weren't able to collect
That's the whole thing. And I will tell you, I would suggest you give the Social Security Administration a call, and because this just got passed, so a lot of the details are, not ironed
Still being
out
worked
yet.
out.
But
Okay.
but you can find out how much you're going to get. But it's interesting because I can think of many of my clients that have gotten like railroad retirement and they got no Social Security, or they got a partial federal Social Security equivalent, but it wasn't what they had paid in, and so this made it fair.
Oh, great.
It's about time, right?
Yeah.
Yeah, it's about
We got some
time.
money coming to us, I think.
Yeah, so call Social Security. I'm sure Monday will be very busy because Mondays are busy, but give them a call and
Tuesday.
they'll tell you how much. Tuesday's better, yeah.
Call them Tuesday because Monday's a holiday.
Monday's a holiday, right?
That's
So
true.
Tuesday's really Monday.
Is it MLK Day?
Yep.
Yep.
Okay, well, okay. That's
Okay.
good.
All right,
All right,
great.
I'm Esther
Thanks,
Goulias,
Paula.
the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. Text us at 716-8030930. We have
Tracy. Yes.
Hey, Tracy.
Hello there. Follow-up question to your earlier comment about sales tax on capital improvement.
Yes.
Yes, I put in a cement driveway and a new septic system, and I paid sales tax on both.
You should
Should
not
I
have.
not
You should have. I would go back to the contractor because I'm assuming the contractor did it, and they should have given you a form from New York State that shows that you were exempt from paying sales tax, and they can actually adjust that when they do their sales tax next period and get that money back and give you your money back.
What if they don't want to, or say we just don't do that? I remember when you put the driveway in, I'm like, I don't think I have to pay sales tax on this because it was a $14,000 driveway, so the tax was a lot.
Right.
And he said, yes, you do.
No, you don't.
Is there any-
and that's what's so frustrating is that when you're dealing with a contractor who really doesn't want to know taxes, and you can appreciate that. He doesn't want to deal with taxes, but unfortunately, if they don't do what's right, then his customer suffers. So what you might have to do is walk him or her through that, and if they need help, they can call us. We'll help them.
Right. I would also call New York State sales tax to see if there's something you can do with them, and their number's 518-485-2889.
Okay, so there's no line item to get a refund on.
There's only for the contractor who had paid the taxes into New York State, who should be able to amend that return that he filed to get his money back.
Okay.
And therefore, it's your money.
Yeah. So the septic system and the driveway.
Last I knew, they don't take septic systems out. They leave those in the ground, so it's pretty attached to the house.
Right. All right. Well, thank you for your help.
You're very welcome. If you need anything, give us a jingle.
All right. Take care. Bye-bye.
All right. Thank you. Good luck. Isn't that the truth how it is with everything? Everything's great as long as everybody knows what they're supposed to do. And when they don't, it ends up to be something that you say, gee, I don't want to take them to court.
Yeah.
But that's a lot of money.
That would be a lot of money. Yes.
Right?
Yep.
Okay.
Good
I'm
for
Esther
her for
Goulias,
being
the tax
tenacious.
lady, 8030930, 8030930, star 930 and a cell phone. Text us at 716-8030930. We have anybody else here?
Yeah, we got
holding?
Peter from Hamburg.
Peter.
Hello.
Hi.
Yes, I have a question. My employer that I work for, they went to paperless, so we no longer get checks. Everything is on our statements are on our cell phones.
Sure.
And that, from what I understand, is they're talking about that for next year we might not get a W-2 form for to fill out for taxes. We might have to take a picture of our year-ending statement and submit it. Is it required to have a W-2 form or is a picture?
Okay. Well, things things all change. But I will tell you, I'm not aware of anybody that would be exempt from filing a W-2 form, because that form is what is sent into the IRS to keep track of all of us peons to make sure that we're paying our fair share. So sometimes at the water cooler, when you're with somebody, they go, yeah, next year, you just watch, we won't have W-2s.
You will
as far
get
as I know, next year they'll still be
You will
W-2s.
get a W-2. It will just be digital. So yes,
Right.
you can bring in a printed copy of that
And we'll
digital,
print it out.
or you can email it to us and we'll print it out.
Right.
Okay. Thank you. Thank you
All
very
right,
much.
thank you, Pete. Anybody else here?
There's a phone call and a text. The text is first. Esther, if the politicians are successful in making Social Security taxes exempt, could that happen in time for this year's taxes?
No.
And when I say this year, I mean 2024.
No. It would be, if we're lucky, it'd be 2025 moving forward. But no, it won't affect 20. I mean, well, okay, so let me say this. Anything that they want to do, if they can pass it, it's going to become the law. But I don't think so, not for 2024. I think 2025 is a stretch, but I'm thinking more at 2026. And so that's part of what we want to do, is that as soon as we find out what it is, we want to get our clients in the know so that they can make those plans, because it would be quite a wonderful windfall if the Social Security is tax exempt, as well as overtime, as well as tip income.
Yeah. Chris wants to fit in Hank before the end of the show.
All right, Hank.
Go ahead, Hank. Well,
Hello, Hank.
well, Hank's going to have to call us during the week.
I think of Hank as a country western singer, right?
Yeah, but you're right. As soon as we find out, everybody else will
we'll
be...
let you know as soon as we find out. When they're passing laws, they can pretty much do whatever they want. And obviously they have the House, the Senate, and the presidency. The House is kind of a thin margin, but we'll see.
Another thing I want to add in. So the guy who pays $46,000 in child care, he said to me, I'm going to tell my employer to start paying me in tips.
Well, he should do the HSA. I mean,
yes, I mentioned that.
What
Flex,
was that
Flex,
called?
Flex.
The flexible spending account, so he can put $5,000 rather than the $3,000 away.
Correct.
Right?
Correct.
Because that's another weird thing in the tax law. All right, I'm Esther Golias, the tax lady. Our offices are open Monday from 9 to 9, 9 to 5 on Saturday. We'll get you whatever anybody says they can do, we can do for less money. We are absolutely in your corner. We want to help you. And don't assume you don't have to file a return, because you might have money coming back, especially if you're a homeowner and you paid property taxes that were substantial in the last 3 years. You might have like $1,000 coming back from the IT 229. Until next week, God bless you guys for listening. Go Bills. Thanks for listening. Bye-bye.